Today we're diving into a major economic shift that's sending ripples through the global financial landscape, the BRICS alliance and its impact on US banking stability. The BRICS bloc, Brazil, Russia, India, China and South Africa, has been making headlines for its push to reduce reliance on the US dollar. With the alliance now expanding and member nations accumulating gold reserves, US banks face mounting pressure, carrying $500 billion in unrealized losses. Let's unpack how these forces interact, why it matters, and what it could mean for the future of global finance. BRICS has gained traction over recent years, especially since the West imposed sanctions on Russia in 2022. In response, BRICS members have accelerated their de-dollarization efforts, moving away from US dollar reserves toward alternative assets, including gold and each other's currencies. This alliance now holds significant sway over 40% of the world's population and around 25% of its GDP, amplifying its voice in shaping economic norms. In the last 18 months alone, BRICS central banks and other developing nations have collectively acquired a massive 800 tons of gold. China, a key BRICS member, purchased an impressive 225 tons, underscoring their strategy to diversify reserves. The World Gold Council notes that this gold buying spree is one of the highest seen in decades, and it's no coincidence. By securing gold, BRICS nations hedge against dollar risks and aim to reinforce their financial independence from the US-led global order. The numbers tell a striking story. The share of global central bank reserves held in US dollars has fallen to 58.2%, its lowest level since 1995. This trend reflects a growing movement toward de-dollarization, with countries looking to decrease their dependency on the dollar due to economic and political uncertainties. BRICS nations are leading the charge, advocating for a shift that could reshape global trade and finance over the coming decades. Back in the United States, the situation is growing complex. Over the past 3 years, 15 US banks have collapsed, sparking concerns about the stability of the banking sector. According to a report from Florida Atlantic University, US banks now face over $500 billion in unrealized losses on investment securities. These unrealized losses banks would incur if they sold certain assets today, reflect the challenges of high interest rates and inflation affecting US treasuries and other securities. As of the second quarter of 2024, these unrealized losses stood at a staggering $513 billion, down slightly from $516 billion earlier in the year, but still troubling. While the dip may seem small, experts warn that banks remain vulnerable, especially as the 10-year US Treasury yield fluctuates amid inflation and heightened financial uncertainty. Rebel Cole, a finance expert at FAU, points to uninsured deposits and volatility as additional factors that could intensify these losses, putting the US banking system under more pressure. Compounding these challenges is the US national debt, now over $35.7 trillion. Within just 3 days in early October, the debt surged by $345 billion. To manage this enormous financial burden, the government is currently paying around $3 billion in interest every day, a drain on resources that impacts fiscal policies and financial stability. BRICS' influence has another direct impact on the US economy. The de-dollarization movement has led to reduced demand for US treasuries. BRICS countries, especially China and Russia, have been scaling back their holdings of US government debt, putting additional pressure on the dollar's value. Analysts are now watching to see if more countries will follow suit, accelerating the trend away from US dollar dominance. Meanwhile, BRICS leaders are discussing a potential new currency for trade, one that could serve as a direct competitor to the US dollar. The idea is ambitious and faces challenges, but even the discussion alone signals a shift in global sentiment toward a multipolar currency system. With the possible induction of new BRICS members after the 2024 summit, the alliance may grow stronger, expanding its reach and currency influence. Alongside gold, some BRICS nations are exploring cryptocurrencies as a potential asset class to diversify reserves further. Russia, for example, has hinted at using digital currencies for trade to bypass sanctions. This potential mix of gold, digital assets, and non-dollar currencies could offer BRICS more financial independence while challenging the dollar's traditional role in global finance. So what does this mean for the global economy? If BRICS succeeds in weakening the dollar's hold, it could pave the way for a more diversified financial landscape. For the US, this spells continued pressure on the banking system, where unrealized losses and debt could amplify financial instability. For developing countries, BRICS's de-dollarization strategy offers an alternative pathway, potentially less tied to the economic cycles and fiscal policies of the US. As we watch this unfolding economic power play, one thing is clear: the global financial balance is shifting. With BRICS and other countries reassessing their dollar dependency, the implications are significant. It may take years to fully understand the effects, but the foundation of a new financial era seems to be forming right before our eyes. What do you think? Could the BRICS bloc really challenge the US dollar's dominance, or is this just a temporary trend? Let us know your thoughts in the comments below, and don't forget to subscribe for more updates on global finance.